The foreign exchange market is where investors, banks, businesses, and governments buy and sell world currencies. Also called the Forex market, it is by far the largest, most liquid market in the world, with roughly $4 trillion changing hands every day. But it wasn't always that way. Between 1944 and 1971, the value of the world's currencies were all pegged to the United States dollar. It was a way of stabilizing the world's economy, which was highly volatile following World War II. But as the years went on, countries grew tired of this system. After all, the US dollar was pegged to the price of gold, so every time gold rose in value, inflation would spread far and wide. That is, until 1971, when US President Richard Nixon eliminated the gold standard for the US, effectively severing the connection between the US dollar and international currencies. This new, free-floating environment, in which the value of currencies fluctuated based on market conditions, soon gave rise to the modern currency exchange market. Unlike the stock market, Forex trading is an over-the-counter market and is not conducted in a physical location. There are two types of Forex trading. Institutional, which runs the interbank market and consists mostly of large banks, and exchange-based trading, which is more open and has recently spawned web-based trading platforms that allow anyone to get involved. Like consumers who want to buy goods from a foreign country, or travelers looking for the best exchange rate, or businesses who are conducting trade abroad. And of course, investors and speculators who wish to benefit from movements in the Forex markets. For these investors, trading on the Forex market offers several advantages. First, it's open 24 hours a day, 5 days a week, with the greatest liquidity occurring when the business hours in multiple time zones overlap. Second, it's relatively cheap, thanks to tighter spreads as compared to other securities like stocks. Third, because of margin-based trading, there's a greater potential to see high returns in a short amount of time. And finally, through short sales, you can profit regardless of the direction of the overall market. But, of course, trading in the Forex market doesn't come without risk. That's why you should never trade with money that you can't afford to lose. And you should always deal with reputable brokers who are in good standing with a recognized regulator. So, those